And hi everyone, welcome to the Buffett and Beyond Stock of the Week, and we're going over Advanced Micro devices, and it is up 158% so far this year. Totally amazing. And remember folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's see what Advanced Micro does. Advanced Micro Devices is a major semiconductor company that designs high-performance computing chips, and it generally does not manufacture the chips itself. Production is outsourced primarily to foundries such as TSM, Taiwan Semiconductor, folks. Yeah, we own both of these stocks, Advanced Micro and Taiwan Semi. And AMD competes mainly with NVIDIA in AI accelerators and those graphic chips, and Intel in the PC and server processors, and Broadcom and other specialized chip makers in certain data center and embedded markets. Now, folks, just want to let you know, we also own NVIDIA and we also own Broadcom. And we don't own Intel because we've gone over it in our weekly newsletter, and we show you why. But down here, in simple terms, AMD designs the computing engines that power PC servers, AI systems, and game consoles. Yeah, gaming is really big out there, folks. And its largest growth opportunity is supplying chips for AI data centers. Ticker symbol AMD. Yeah, we know that. And let's see what it does over 5 years. Well, let's go over the clean surplus return on equity. And this is just a snapshot. And I like to compare this to the return on equity. Number one, it's different, totally different than the traditional accounting return on equity, or they also use GAAP, generally accepted accounting principles. So clean surplus ROE is its own ROE, and it's comparable not only among companies in an industry, but across industries, and that's why it's so important. So we look at this as, okay, where would you rather put your money? In a bank that's paying you 13.5% or a bank that's paying you 33%? Yeah, no, not much of a question there. And the net income, that's the clean surplus earnings. Now, net income takes away the non-recurring items and future liabilities, so it compares one net income to another net income of a company. And the average stock out there, 13%. Advanced Micro, 35%. And when it comes to revenue, yeah, you want revenue, folks, because revenue is the thing that brings money to the bottom line over here. So the average stock, 7.1. Advanced Micro, almost 4 times the average stock out there. So it is really making some serious money out there, folks. And let's look a little closer. We've had AMD for a long time in our portfolios, and you can see even way back in 2020, it was making over the 20% that we require to be in our growth portfolio. So yeah, we've had it for a while, and boy, oh boy, is it starting to shoot up all of a sudden with the AI data centers and backlogs all over the place in the memory chips and the designs, and on and on and on. It gets very complicated out there. A lot of these companies overlap one another. So it's got that clean surplus ROE above the 20% threshold, and it has for a long time, since 2020. So we're looking really good. Retention rate 100%. That means it's taking all the money it's making and putting it back into itself in order to grow, which means more money to the bottom line. Years to pay debt. This is Buffett's rule of thumb, where he says if a company takes all the money it's making, how many years would it take to pay off its debt? And his rule of thumb is 5 years or less. Our rule of thumb is 3 years or less. This company can pay off its debt in a couple of months. So it has no debt whatever to speak about. And when interest rates go up, we don't have to worry about Advanced Micro having to take some of the profits and pay off the interest on the debt, because it hardly has any at all. Recent dividend, 0%. We like that because we want to see all the money a growth company is making to put back into itself. Now, we look at recent dividends for our other portfolio, dividend growth and income portfolio. Of course, we want to see the income. So those are companies such as Coca-Cola, because guess what? Coca-Cola is in every country in the world anyway. And so is it going to grow much? No. But does it make a lot of money? It sure does. So its dividend is much more important. And that's the kind of stock we look at in the dividend growth and income portfolio. But for our growth portfolio, we really don't want to see a dividend at all. We want to see most of the money, if not all the money, and in this case, all the money, going back into the company in order to grow. And let's see what it's done year to date. Black line down here is the S&P 500. Up here is Advanced Micro at 158% for the year to date. Folks, we're talking about 7 months here, a little bit less than 7 months. So yeah, here's your market down here at 8.5%, let's call it, and this stock up 158%. Unbelievable. And let's look at the past 5 years. Well, with the stock market itself, measured by the S&P 500, up 70%, this stock is up over 500%, 507% to be exact. So yeah, it's a pretty nice stock. We've had it for a long time. We don't intend on selling. Might lighten up on a position a little bit, but we're not going to sell. This stock is really competing with the other big guys out there, and we have most of those stocks anyway. So we're well diversified in that area in case one company takes over more than the other company in a certain area. But anyway, we like AMD. And remember our goal, build your wealth faster and safer with better than average stocks. And folks, this stock has been a better than average stock since before 2020. So that's why we like AMD, and is well situated for this whole AI movement that's going on and on and on. And folks, we've had another tumultuous week, up and down. Earnings are out, and you know earnings season is absolutely crazy. So we just kind of let the stocks float around, because even with Google this morning, it's done everything it can, and it was down 5%. So you just stay away from this type of volatility. Meanwhile, stay away from the market itself for a while until earnings season is over, and go out, enjoy yourself, take your mind off the market, be with your loved ones. Most of all, stay safe, stay healthy. We'll see you back here in a couple of days.